Tuesday. Today is March 8, 2020, and we're going to take a look at what occurred over the past week, what we noticed coming down the pipeline, how can we use all this information to make some money in the markets this week. So as you guys already know, it's been a very, very interesting week. I think I would like to try to start off on a positive note since there's so much negativity in the air. We did get the job numbers back that actually did come back pretty good. But those job numbers, these are not good jobs, leisure hotel jobs, where, again, the coronavirus, the situation that's happening with the coronavirus is actually going to take a lot of those jobs away. So everything that the market's putting up now is going to be depleted times more. So there's nothing for the markets to really rally on. So even though we had some positive data on that, it's not sustainable data. So therefore, you're not going to get, the positive move in the markets that we have. All right. So we had that. We also had Super Tuesdays where, Joe Biden, basically swept that, came out of nowhere. Everybody know he was just, dragging in the polls and everything. And it's out of nowhere. He came up with a victory. And so that was really interesting because, as you guys know, I've been saying Sanders is going to win it. And they look like they're trying to go ahead and steal it away from him, which is interesting because, we got election coming up, so we can't avoid the election talk and the impacts of that in the market this November. So that's a really interesting situation because Biden can't beat Trump. So I don't know who is voting for Biden, which is it's interesting that people would think that people will vote for Biden in this situation. If you were a Democrat, then you probably would have wanted to go with the wild card, which is Bernie. Bernie was the wild card. And I think that Bernie has a better chance of beating a Trump than Biden does. Because, there's nothing really. If you want more of the same, you're going to get more of the same. So there's no reason to even switch a president out if that's what you're going for. So that's the whole situation to make any sense anyway. I don't even know anybody who's actually voting for Biden. Everybody on my timeline was going for Bernie, which is interesting. So I know that they're saying that, the young people that Bernie has, mustered. And I told y'all Bernie's going to get the young people. And so he does have the young people, but they're saying that the young people are not going out to vote. Now, I don't know if that's true or not. It could be. But you guys know how this political game, it's a dirty game. Wallstreet already had Biden's name on the ticket. So, he's already chosen for this position, but he's not sharp in the head. You know what I'm saying? Bernie's old, but he's actually still sharp, so he can fight. But the establishment don't want Bernie. So, and I told you guys what they're going to try to do. They're going to try to rob Bernie again because he's way too far left for him. But the radical change that people are looking for, you actually get that in Bernie. Doesn't mean that it's right or wrong, but I'm just saying. So anyhow, I don't know why the Democrats are believing that Biden can beat Trump if he can't even get Bernie's fan base. He's going to have to swing over Bernie's fan base, and they're not on board with that. They're not feeling that, not at all. So I don't know what he's going to have to do. He's probably going to have to go even further left to try to get them on board. I know he's talking about trying to get Michelle Obama. She's symbolic. So that may work because she's symbolic, but I don't know, I don't think any of that is actually going to work, to be honest. So we take a look at the economy, the job numbers and everything is doing really good right now. As of right now, from the last reports that we have, if you take a look at the job reports, the unemployment reports, the inflation rates, everything as far as economy looks actually really good, except for when we get into the yield curve. The yield is just it's crazy. The PMI numbers, we got some really deteriorating, data that's in the markets right now. That's not good. But the situation with Trump is that because this coronavirus is showing up and this coronavirus is taking the wind from the markets, and we're more than likely to go into a recession from this thing. And if we do go into the recession, it doesn't mean that Trump will lose. Because again, he's bragging about this whole economy situation because when we last checked off, he was actually doing good, but he can actually blame it on the coronavirus. And the coronavirus took us into a recession. Right. And so again, as I price this out in my brain, he still wins even against a Biden, but Sanders is a little more dangerous because again, you got to think if we go into a recession, people are going to lose their jobs. This is going to be happening really soon because of this coronavirus is shutting everything down. The layoffs are coming. I told you guys this last week. The layoffs are coming. The supply chain has been disrupted. You can't get goods in. I was just listening to something today with the health officials were talking about they're wanting cities to shut down. So if they issue stuff like this is really, really bad for the whole economy itself. This is not good. I'm telling you. You guys are looking at the futures right now. The futures are bleeding red because it's not about is it the flu or it's not that bad, this, that, and the third. It's about the panic that is creating. That panic is sending shocks through the market like we haven't seen in a very, very, very long time. The volatility is crazy. So just keep that in mind. And on my screen, you guys, we're looking at the VIX indicator right now, trading live right now, 43.55. This is crazy. Okay. So it's showing you that the fear is here. Okay. So when the fear is here, you do not mess around. It's not no dip buying. If you guys remember last week, I told you, go back and look at the Game Plan Sunday video from last week. And I told you the dip buyers were going to foolishly try to come in to try to pick the markets back up, and they were going to get crushed. And I'll show you guys what I saw, why I said what I said, and why it played out the way that I said it was going to play out. But just keep in mind on the political side, again, just to reiterate that whole situation, is that Biden cannot beat Trump. So the Democrats have thrown this election away, point blank, period. And again, if they saying that the young people did not come out and vote for Bernie, what make you think those same people are going to come out and vote for Joe Biden? Because he's got to have Bernie's fan base to come and vote for him. You see what I'm saying? So again, if the Democrats are going for Biden, they're completely lost. So you might as well forget about it. Bernie Sanders, I know he's a wild card, but that's your best chance, because when it's the recession hit, people are losing jobs. They're going to be looking at what's in it for me. If Trump doesn't have anything in it for you, but Bernie Sanders is saying, I'm going to pay for your college and pay for your health care, whether he can get it done or not, it doesn't actually matter. When you got people that's broke, they're going to vote for their best interest. Okay. So, I mean, that's just what it is. You know what I'm saying? Hey, if Bernie want to pay off my student loan debt, he can do it. Okay. And I'm not even a Democrat. So, but that's just is what it is. So that's what I was telling everybody, what I was saying with all of that. So anyhow, that was an interesting situation. The markets did kind of come up a little bit when they saw that Biden was taking over. And it's crazy. I really don't even believe it, because it's states that he didn't even visit, states that Bernie had a stronghold in, when he went against Hillary. And these states turn over to Biden for some odd reason. I have no idea who voted for Biden. If y'all know who voted for Biden, y'all let me know, because I don't even know anybody. I got lots of Democratic friends, and none of them have voted for Bernie. So for Biden. I don't know who the hell voted for Biden, but that's interesting. Either way, it's politics. So you guys know how this stuff is. It's rigged. And it's all about the money at the end of the day. So Wall Street got Biden in their back pocket. They want him to go up against Trump so he can easily lose. And Trump going to keep this thing going, because Trump is doing a favor for the corporations so they can compete against China and, globalism and all this other stuff that we got to deal with. So that's my spiel on the whole political talk stuff. Here with the markets, let's get on with it. Right now, you guys see, okay, the markets are in a very, very troubling position. This VIX right here, I'm on a weekly chart, but what I'm going to do is take you guys back to, well, actually, let's keep it on the weekly chart, because I want you to just see how much fear is in the markets right now. The last time we had this spike was here at the 2018, the end of that year. That was the last spike. But actually, let me just go into the monthly. All right. So as we pull up on the monthly chart, you guys can see this VIX here. All right. This is what we've been talking about. All right. The squeeze is firing long on the monthly chart. That's a bigger time frame. So normally when that fires off, it's going to fire for some months. Okay. And that's what happened. Okay. That's what's happening right now. And so I take this high to this low. Okay. That's what I'm swinging from, that high to that low. So you guys can see that. Then we have our up ahead target at the 618 retracement on the Fibonacci. And we can see here in the past that was a testing point in the past on the VIX. That looked like that's where we're going to hit this week. Okay. Or I guess to say, yeah, it should be like maybe this week, because again, this is a monthly chart. So it can come, within this month, basically. It's not at the highest. Okay. This is the 2008 recession levels here. All right. But this is really extremely high. So when the markets, when the VIX is this high, you don't try to come in and buy shit. This is not the dip buying session. Okay. This is, stay the hell up out the way. Let the markets do what it's going to do. Like, you either shorting or you stay the hell out the way. This is not the time to be playing around. You feel me? You're going to lose it all. So that's what happened with the bulls last week. They tried to come in and dip buy, got crushed. All right. So, and again, you guys can see that's on the VIX right there. All right, let's take a look at the ES. All right, so here go some levels that we had on the weekly, on the ES. And let me show you guys what I was telling you I was showing you anyway. What I said last week. Why I said what I said. I said they were going to come in and try to buy the dip and they were going to get crushed. Because it's an easy step pattern that you're looking at. Okay, you caught that riff down. We had this come up here. The Fibonacci caught it, right? You see that Fibonacci extension? It caught it. So I knew that was going to be a key area of resistance and that it was going to get crushed. And that's where we are now. So it's bleeding through this floor right here. All right. It's already bleeding through this floor right now in real time. That's a big bear flag. That's right. This is a bear flag. And so we are at oversold territories. Okay. However, as we guys notice, the overbought and oversold territories sometimes can stay in an extended zone. It doesn't automatically reverse. And so what people are trying to do right now is trying to time it and trying to, catch the reversal. So that's what they thought it was going to do when we hit this level here, and they caught that reversal. But again, this fear is nothing that we have seen like this in a very, very long time. I haven't seen anything like this since I've been actually trading. So this is it's a crazy thing because you're at this level at the floors, but the floors are getting breached. So that's a dangerous thing. Do you really want to short or do you want to, buy the reversal at this zone? I'm not buying it, right? We need to wait and see if this thing is going to stabilize or see how far it's going to come down. Okay. So that's what I saw when I looked at this. And then also I saw the weekly chart. So you have to also dial back in on the weekly chart. And when I saw the weekly chart on the trend itself was like, okay. So you saw the weekly chart with that steep, that steep bounce right there, that steep drop. It's like falling knife right there, basically. But then I had a sell trigger, okay, that says to sell. You guys see the last time we got that, the market sold off. And then we have another one that's here right now on the weekly chart. It's saying to sell off. And so even though it's at this 100, that's going to be the test to see if it can hold this level this week, or do we continue to bleed further down to the next zone, which is the 200 moving average. So about the 2600 level. Okay. So this is what I saw last week. And this is what we see right now coming in. This is still the question. So we still, still a lot, so much volatility. It's hard to call this. So you really don't want to be calling shots in this kind of environment, but you do want to take a look at the risk that we have. What is everything that's at risk? Okay. What are our zones? This is a zone, the 2600 zone, right? We're already bleeding through this level right here. Okay. And this is happening right now. And the markets haven't even opened up. Tomorrow this could go even further. So also we saw that we were overbought up here, and then we're starting to come down. We got more space to come down. If we look at the stochastics on the weekly chart, we see the momentum dropping. We see the trend dropping. These are all the different things that I see. So I'm more poised to thinking of going south. Okay. All right. So with that being said, let's see what we got over here. Bear flag, lowest floor is 2550. Justin said you got a 2550. So yeah, you're beneath the 200. You're beneath the 200 moving average. But you already know the next stop has got to be this 2600 market light hold numbers before we can get to a 2550. Not even playing long in this market. I've been short most of the week. I'm sure we have to break lots of resistance to get there, though. Yeah, definitely. So we're at a very, very interesting situation. Let me show you guys the Russell. All right, so even the Russell has been getting, splattered over here. And right now it's bleeding through my floors again. So I got another zone down here at 1300 on the, let me just go with my arrows here, 1300 down here. So if we continue to bleed, that's the next zone right here, 1300 on the Russell. So that makes everything very interesting right now. As you guys can see, markets, equities are doing bad. I mean, it's just the way it is. Let me actually go to, which one do I want to look at? Let me just go to my sector. All right. So with equities looking as bad as they are, you guys know that gold is rocking right now. Gold is hitting new highs right now. Let's take a look at gold. All right. So taking a look at gold right now, gold is at those overbought territories, but it's continuing to press forward. It's continuing to move north. So 1700 is the target. We already tagged that. If you guys can see, the 1700 tag has already cleared. I can get this thing to cooperate with me here. All right, so 1700 has already been tagged on goals. You got 1750 at the next level, 1770, and then you get the 1800. Those are all the targets up north. Still not seeing any signs of weakness that's going to pull it down just yet, except for the fact that, maybe people will try to profit take, but I just can't see it right now. Now, the interesting thing is that gold has been actually, pumping hard, which, is good for, and I told you guys the past game plan Sunday, if gold is, going to go up, that's not going to be good for equities. That's not what I was hoping, but it is what it is. So we already knew what the particular situation was going to play out. Interesting thing is that silver has not been, see your face cam in the way. Okay. Oh yeah. Excuse me. All right. So, silver has not really been participating with gold. All right. Let me see. We got somebody on YouTube. Can't see. Okay. Yeah. You got to actually catch the live group. Give me 1 second. Let me actually get the, send this young man an invitation. All right. That's the link right there. So you can join the chat. This is, again, we're on YouTube for the first time. So thank you guys for joining us on the YouTube side. Just testing this out. We normally go on the Facebook side. I want to see what kind of reaction we're going to get, Facebook versus YouTube. What's going to be the best return for us? Are we spending our time and efforts and trying to help the people? Is Facebook listening? Is Facebook full of garbage? Are YouTubers listening or YouTube full of garbage? I don't know. We just got to test. This is all new. So anyhow, but if you click that link in there, you'll actually join the group where everybody else is at and you get the full screen, the full experience. So definitely, if you have any questions, just leave them in the chat. We'll take care of you, my man. Silver. Yeah. So silver is definitely moving, not moving with gold here. It does have a squeeze, but that squeeze is looking like it's going to fire short. So silver is not the move this week. It's just not showing us any signs of positivity, but gold is still moving. So, I just want to show you guys that. And then I'm gonna show you guys bonds right now. Bonds is popping crazy. Let's look at the 30-year. All right, so this is the 30-year bonds right here. And I didn't even think bonds was going to pop through these levels here. I mean, bonds is like, it's crazy how bonds is going so high. They're just buying it up because they know that the Feds are going to keep cutting rates. Now, this is not good for, you're welcome, Xavier. Welcome to the group, man. This is not good for financial companies, banks, insurance companies, none of those companies, right? When bonds are so low, and I'm gonna show you guys that here in a second. But the financials getting wrecked right now because everybody know they can't make any money with the bonds being the way that they are. And then the Feds are going to cut rates again next week. Well, again, that's at least the consensus on Wall Street. We got, close to 80% probability that they're going to cut. We just had an emergency rate cut for the first time. They only do emergency rate cuts when we're in a recession. So there are, again, people thinking that we're already in a recession. We'll have to see because of the emergency rate cut that we had. That emergency rate cut was very significant. In fact, let me pull up, because we got bonds up real quick, but let me just pull up the yields. All right. So this is our handy dandy yield curve. All right. Oh, this is the yield spread right here. And you guys see the yields falling off the cliff, right? Yields is just falling off the cliff. This is the 3-month and the 10-year. Let me give you another view so you can see the curve actually. All right, so here got a curve. What I'm gonna do is I'm gonna take a dial back here real quick. Let's go back. Let's go back a couple of days. I want you guys to see how this stuff works. We did a class on the yield curve. I taught you guys a class. Again, we got the new website, and so a lot of stuff is actually on the new website. Some of the old classes are not there because we're revamping the entire website. So make sure you guys subscribe if you already haven't. It's at wallstreetjackboyz.com, but we have a so much better experience for you guys. And we'll preview that here when we finish the game plan session so you guys can get acquainted with the new website and new platform. But I'm going to just take you back a couple of days here with the yield curve. Okay. Now, remember, we're not going to teach the whole thing here. I'm just show you guys. I just want you to see this. The Feds control the short portion of the yield curve, right? So this is the part they control. Free markets is covering everything in the backside. So this is the part that they manipulate, right? They drive that up and drive it down when they want to get the markets to spend or to save, right? Or whatever they're doing. They're manipulating it. But I want you to see this manipulation. Now, the key thing is that we pay attention to is the 3 month and the 10-year. These are the ones that I track mostly. So if you lend the government your money, in 3 months, you're going to make 1.45. If you lend them your money for 10 years, you only get 1.3. That is not right. That is a yield curve inversion. So when you see that, that means that that's normally a sign that the economy is in a very bad situation. It's turning over, and you're more than likely going to go into recession. This is the most accurate indicator there is. It's the yield curve. So many of you probably haven't seen it, but this is what it looks like. So we don't want to see the short-term rates higher than the long-term rates. Okay, so when that happens, that means that they're buying bonds. When they buy the bonds, price goes up, but the yields go down. So as they're buying it up, they're trying to secure and lock in those coupons. They're trying to lock in those yields. The yields, they continue to go down. So that's what's happening. They buy, the price goes up, and then the yields go down. So just to show you just a quick, again, that's the bonds. You see the price is up. All right. Price is up. Okay. So they're buying that up, and then the yields, they're getting pushed down. All right, so they're getting pushed down here. All right, so this is the part that the Feds go take control over. I got this February 27th. I just want you guys to see this in motion. I'm going to fast forward it on a daily basis, and you're going to see how this starts to manipulate, how the Feds control all of this, right? So as I go, you see how it starts to steepen. It's falling, okay? That's falling. And this is Friday. Did y'all see that drop? There's a huge drop, right? Because they did an emergency cut, and it's supposed to drop it down, 50 point basis, and it's below that. I mean, it's at 0.79 right now, and it's interesting to see if they even lose control of this situation. I don't even it looks like they might even lose control of the yields. So we'll have to see how that plays out. But it's a lot of things that's not positive in the economy right now, and the coronavirus is looking like the thing that's popping the bubble. So again, this is where we are. I just want you guys to see where we are, this yield curve. This is important because the bonds, everybody's going to be paying attention to the bonds this week. Okay. And this is on our website too. You guys can interact with this, do your own studies and all that with the yield curve. So let me know if you have any questions about that. I'll go ahead and just close that out. All right. And here we are. Bonds continuing. So this is Friday, this candlestick right here. This is today, right now, live as we speak. It's still going up, and they're looking to get it all the way up here. So what that's is showing us, the Feds, they're going to have to cut interest rates again. And, even if they they may do another emergency cut this week. It depends on how bad this thing goes. But I think that they are seeing that them cutting rates is not working. It's not going to work. And I said this last Game Plan Sunday and the week before, I was like, I don't know how cutting interest rates is going to save the economy from this coronavirus situation. It's very interesting. But what they're calling on is fiscal policy. So those that know fiscal policy, that's government. They're calling on government to do things. That's right, Xavier. They got a meeting here next week, I think on the 17th and 18th. So, but they're looking for fiscal policy. Fiscal policy is the government. Okay. They're looking for government to get this thing stimulated. And I told you guys back when Trump and Steve Mnuchin and all them was at the World Economic Forum thing that they just had in the beginning of the year. Steve Mnuchin was already revealing to us that they're going to, getting ready to launch those new bonds, and they're going to actually be doing another tax cut. It's going to be for the middle class tax cut. They'll call it tax cut 2.0. I think they're scheduled to do it around September. But with the coronavirus doing what it's doing, I'm thinking that they're probably going to move pretty quick on all this stuff. And then there also talks that they may have to pull a George Bush, where they had to put money directly in the hands of people. You guys old enough. Y'all were around when that happened, when they had to cut the checks. Everybody got like $500 a piece or $1,000 a piece or something like that. So they're talking about, Trump and them, they may have to do that to get, people spending, because what's happening right now is that with this level of fear in the markets, people, wealth is impacted first, income comes afterwards, right? So when wealth shuts down, income shuts down afterwards. So you got to pay attention to the wealth. Wealth stops spending money. They stop investing money because of fear that, they're not going to get any return. They're not going to get any yield. If you look at the bonds, yields are going to zero. So that is not good. They can't make any money. The banks can't make any money. Insurance companies can't make any money. When they make money, That's how they invested. And so if they put their money, invest in their money, they're making less than 1% right now. So they're not making any money when you factor in inflation. They're negative, so they're upside down, which is not good. So as you see, that's why you've seen a lot of the banks getting crushed here right now, because everybody's already anticipating the price and then the rate cut coming in next week also. So that's all interesting stuff right there. Another thing here that's bad is oil. So if you guys been catching the news, man, oil is crazy. Yeah, if you guys can see oil, I mean, oil is crazy. Okay. Taking a look here, I have my levels down here at oil. You guys see that it's, behaving towards my levels. As you see, I had a short-term level and I had a bigger term level, and it's behaving towards my levels right now. The test is to see if oil is going to hold at these levels. Okay, this is this zone right here. We're testing right at this level. But if you guys can see, this was Friday. Okay, there was, news basically OPEC, they can't get Russia to, to get behind them and, curbing, supply so they can get the prices back up, right? And Russia got some beef with the U.S. It's a deep, deep story here, but it's just like they're not happy with the U.S. pushing out all this oil, blah, blah, blah. Y'all know OPEC control their oil prices. They can control supply and demand. So they can tell people, hey, stop producing the oil. We got too many barrels of oil. So they create the supply and demand. So it's all artificial, basically. And their whole goal is to return value to their shareholders at the end of the day. And so you guys see oil has been just, not been doing good, not at all. But oil is this is just terrible. This gap down was happening right now. You see that? Look at that move. I mean, that's right now. And that's just because of that news, right? So that's not good on the markets either. So I have, it's more bad news than it is good news right now. And I can't see how we are going to overcome this right now. So I'm playing it to the safe side this week. Okay. Now we may get some positive news that may get some, the market's rallying up a little bit, but I'm more on the cautionary side right now, just because nobody knows what is going to happen. We're at a time that is just not good. Okay. It's not good. Now, if you're looking for some setups, I haven't actually seen many setups, but I take about, how much time we got? Yeah. So we're right here at time. I'll take 3 from you guys, and then, we'll go from there. I think some of the setups that I do see on the long side, if the markets rally, and this is not going to be a Monday kind of play, this will probably be like a Tuesday or Wednesday if we get a bounce back. But I do like Eli Lilly, with all this selling off. As you guys see, this has been performing really good. All right. And so it is performing really good this way. I took this swing high to this swing low, and we're right above our 618. Okay. We have a projection up here at 155. That's a target right there. I had a buy trigger right here. I got the stochastics moving up. I got momentum moving up, and I got the trend moving up. So all of those in alignment, has me poised to look at the 155 target. So I do like that to the positive side. So if anything positive move, I would like to be exposed there. Just a small amount of exposure, not too heavy. And then also Walmart. So Walmart is interesting also. It's not the strongest setup, but if you consider how well it held up throughout the sell-off of the market sold off really, really bad, and it's been trading in this range here. And it could be forming a bear flag, actually. So this could be forming a bear flag. It could be, forming some kind of double, I would say double bottom, but this is too long for that. But it could be forming some kind of positive pattern here to the upside. So I do like that, to the positive side. So I'm going to keep my eyes on that to see how well it behaves. Well, that's pretty much all I, had time to take a look at. So if you guys got anything you want to take a look at real quick, we'll go ahead and look at that. If you guys on the YouTube side, make sure you hit that link so you can join the private group over here. You have priority over here. These are all the members on the side. Ron, you got any setups for me this week? I know Ron normally has some setups. Dustin, I know Dustin normally has some setups. What you guys got on your radar? Mark, is Mark in here? Yeah, Mark is in here. Anything you guys are taking a look at? GDX has been really weak. I'll take a look at it for you anyway. Yeah, so gold is moving up, but the gold miners, they have not been participating in this rally. They've been really weak, and I'm getting some mixed signals here. Let me actually, let's see. I'll take this swing here to swing low. All right, so that's to the upside target, but it's struggling. I mean, when you take a look at how strong gold is going, I'll show you the charts on gold. Gold is pumping, right? So your normal stocks like your GLD, they're moving, but GDX is not. And so for that reason, I'm not poised to move into GDX until they show us, some upside. I mean, they got some buy triggers, but the buy triggers on this one hasn't played out. I see in the past, I had some buy triggers here that didn't play out really well. Buy trigger here that didn't play out too well. This one here did play out well, but it fizzled out too quick. It wasn't even a sustained move there. So I'm not liking the miners here. They're just not doing good. It may chop sideways here, but I haven't seen any movement there. So I'll be waiting to see if any movement moves into those. So, again, go with your classic GLD if you want gold. It's been moving higher. And again, it's right here at these tops, but I'll be more poised to play this than anything else. And so you got 161 at the top, and that's more likely something that can move. So GLD has been moving. I mean, that's been working nonstop. So it's been moving with gold. So if you're looking for some gold exposure, it'll be in GLD. What else we got? No long setups for you guys. Yeah, it's been a crazy week. So, I totally understand, man. It's like, we have to wait this thing out to see how it's going to play out. Really, this is not a good position. So, you got to think, your 401ks, anybody that's long investing, those things have not, they're getting wiped out. So everything for the whole year, all the money that you made for the year, everybody's bragging about, you lost all that. Okay. This is why it's a good reason for you to, trade the markets, understand the market so you can catch all of this. Right. So, this is 2020. You guys can see this is 2020 right here. And right here is where you lost it all. Okay. So, on the year, those gains, it was rocking real nice. And I told you guys, I can't see why we're jumping up so high. Those earnings are not all of that. Even though they're beating earnings, Wall Street has lowered the expectations. So they're beating things of lower expectations. And it's lower than last year. So it's not that positive. Now you guys are in a, negative territory. We're trading right here to 200, under the 200. So that's not good. So we're hitting the bearish territory. So that means you don't understand how to trade. You're going to be losing everything. It's going to be 08 times 2 this time around. So definitely. Let me see. We got on YouTube, Aesthetic, Sam. Okay. I'll take a look at y'all stuff real quick. Yeah. So, oil basically. Yeah, there you have it. This is, HYG, continue to fall. You got another buy trigger set up on it. Another sell trigger right there. You're looking at bear flags on this thing. Momentum is still down. The trend is down. Stochastics is down. This is not dip buying session right now. This is not dip buying. Even though it may bounce back, we just don't see that. This coronavirus, again, as I mentioned earlier in the session, that they're talking about shutting down cities. Okay, that is not good. Oh, somebody want the Indian stocks? I can't even get a hold of those, my man. Let me see. Indian small caps, ETF. Yeah, I'm not able to even register that one, my man. So we'll just go back to the ES. All right. Okay, I'll take one more, and this is going to be for my man Ron B. LK. Luckin Coffee. Yeah. Another interesting situation here. It does have a squeeze. So we definitely got to make a move here. We got the squeeze in here. Sideways on the trend, but the faster on the stochastics level is going down. We got a sell trigger that's down also, looking like a bear flag, as you see. So we're going to call it to the downside. So there you have it, to some short side exposure. Shout out to Ron B for coming out with that play. All right. Cool. So right now we're at time right now. So hopefully you guys enjoy the session. And maybe we'll try to do this again on YouTube because YouTube, you guys are giving some good reaction. I'm kind of liking it a whole lot better than Facebook right now. People on Facebook just like garbage, I guess. I don't know. YouTubers are for real. So anyhow, I like that. We'll see, how this plays out. But just remember, every Sunday, man, every Sunday, 7 p.m., we're live. You got the link that's in the chat. The replay, if anybody missed this, we'll have the replay out by tomorrow. We try to get out as early as possible because I go in and edit. So anyhow, that's what we have right now. So shout out to everybody for showing up for the Game Plan Sunday session. We're going to bring that session to a close.